Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 6th of April, 2025, and we're providing our regular weekly update for the week ending the 4th of April. Well, gold down, but silver crashed, as did equities. We warned about this possibility re Trump's tariffs, and whilst the equity collapse was not surprising, the extent of silver's collapse was. What happened and what's likely to happen this coming week? Well, let's take a look. Okay, let's look at last week's damage. Gold fell $46, falling from $3,086 to $3,040, having hit a high of 3,168 and a low of 3,017, a fall of 1.5%. Gold spread between high and low was quite a considerable $151. Last week we predicted gold would trade between 2,975 and 3,175. This is exactly what happened, though gold has moved to the bottom half of the range rather than being in the upper half, which it has been recently. Until Friday, gold looked strong, but then just caved in. In sterling terms, gold fell £25, closing at £2,366. And in euros, it fell €74, closing at €2,776. Silver basically collapsed from Thursday onwards. It fell for the week $4.52, moving from $34.21 to $29.69. Having hit a very brief momentary high of $35.22 and a low of $29.26, a fall of 13.2%. The difference between its high and low was an incredible $5.96. Last week we predicted silver would trade between $32.50 and $35.50. We got the upper levels correct, but well overestimated the lower levels. In nearly 10 years of providing our regular gold and silver forecasts, we've only been out, as far as silver is concerned, by $1 just 3 times. Whilst we expected a kickback from Trump's tariffs, this one was huge, and we shall discuss why this happened later in the podcast. In sterling terms, silver fell £3.50, closing at £22.99. And in euros, it closed at 27.04 euros. That's down 4.54 euros. The gold to silver ratio rose a phenomenal 12 points, rising from 90.2 to 1 to 102.4 to 1. For those expecting silver to gold or gold to silver ratio of 20 or less, you can forget it. Now, before we advance further, please consider giving this video a thumbs up and subscribe. During these turbulent times, we really need to reach more people, and we will produce more videos specifically for you, so press that bell sign so that you're notified of them. Now, Bitcoin currently stands at $83,000. That's up $400, which is not bad in this market. It's been as high as $87,000 and as low as $81,500. US equities, well, all equities really, but US were dramatically lower. The Dow Jones closed down 3,269 points and closed at 38,314. The S&P 500 closed down 506 at 5,074. The Nasdaq Composite closed down 1,735 at 15,587. The FTSE 100 index was down 604 points at 8,054. Oils were considerably lower. Some good news, in fact, for consumers. Brent crude closed at $65.58, that's down $7.95, and WTI crude closed at $61.99, that's down $7.37. This early 60s is where we actually wanted to see oil prices go to. The dollar index closed at 103.02, that's down 1.02 on the week. Now, last week we advised looking out for Tuesday's final manufacturing PMIs, which were more or less in line with expectations. We said watch out for the Wednesday's ADP employment report for March. But this showed a higher than expected level of new jobs, some 155,000 compared with expectations of 120. On Thursday's final services PMIs, these were close to expectations, though the ISM report was 2% lower than forecast. Then Friday, the US employment report with prediction for new jobs for March coming in at 140,000, compared with 151,000 in February. Well, the figures blasted through 140 and ended up 228,000. But despite this, the unemployment rate rose from 4.1% to 4.2%. Now, we all know that the Trump tariffs and nations' responses to them, particularly China, had the major effect on markets. But nevertheless, it's still worth noticing what data is coming out of the US this coming week. On Monday, we have consumer credit for March. Wednesday, we have the FOMC minutes. These should prove interesting. Thursday, CPI data for March. Now, the year-over-year rate is anticipated to fall from 2.8 to 2.5, and the core year-over-year rate from 3.1 to 3. Now, we don't envisage a fall in the core rate, though we could be wrong, and potentially a rise next month once these tariffs take hold. But let's wait and see. And Friday, we have the PPI figures. These are the Producer Price Index figures for March, and last month they stood at 0.2%. So, important data with particular attention to be paid midweek and onwards. But what we're all dying to know is what happened to gold and silver prices and markets this past week. Well, the end of last week's video, we stated, and I'll quote it exactly, "So all that remains is to wish you a prosperous week ahead, but beware of equity prices," unquote. Now, just for interest, 3 weeks ago, we instructed our pension fund managers to sell all of our pension holdings in equities and convert it into cash. In so doing, we've saved at least 13% of the value of our pension fund, and perhaps even more in the weeks ahead. To anyone who follows the short-term effect of tariffs, we hope many of you did similarly. Now, 6 months ago, we produced a video entitled, "Will Trump's Tariffs Hurt Americans? The Truth Revealed." And fortunately, we had a risible 379 views of this video. If you'd like to catch up and listen to what we forecast back then, by all means please do so, and we've placed a link for those interested in the comments section below. What is frustrating about that is that it wasn't that long ago where some YouTube gurus were saying, buy, Trump's going to become president, buy equities, buy them fast. And now they will be very sorry, at least at this stage. Let's wait and see at the end of his time. But what has happened could be foreseen, though admittedly silver's 1 week price drop was greater than we expected in such a short time. We did expect a fall of this magnitude once the tariffs came in, but not so quickly. This was, in fact, the worst week for precious metals since 2020. Well, James Hyschik of FX Empire summarizes it nicely, and we'll quote him exactly. Quote, "President Trump's announcement of sweeping reciprocal tariffs and targeted measures against China triggered a reassessment of global trade flows and manufacturing prospects. Semiconductor tariffs are particularly bearish for silver, given its widespread industrial applications. China's response, slapping a 34% levy on all American goods, adds to fears of a drawn-out trade war. The result has been a sharp drop in global demand expectations, particularly in Asia and Europe, two major industrial buyers of silver. A violent decline in equities, highlighted by a 2,000-plus point drop in Dow futures, unleashed margin call selling across the board. Silver was hit especially hard as investors were forced to exit positions to cover losses elsewhere. While gold also saw liquidation, its safe haven bid helped cushion losses. For silver, with weaker monetary demand and no central bank support, the impact was deeper and more sustained. Silver's weakness was compounded by a rising US dollar and an uptick in real yields. Treasury markets stabilized after strong jobs data, pushing the 10-year yield back near 3.88%. The dollar gained as expectations for aggressive Fed cuts were scaled back. Traders now turn their attention to this week's Fed minutes and Thursday's CPI report, both of which could reshape policy expectations. If the minutes signal hesitation to ease, or if CPI comes in hot, silver could face further headwinds from tighter financial conditions and a stronger dollar." Unquote. James' technical analysis suggests that silver could bottom out at around $26 in a worst-case scenario. Most analysts are forecasting silver to fall to around $28.75, at which time traders may become interested again in buying the market. Now, gold is likely to find strong support just below the $3,000 level, so its downside appears at least limited, though we could see gold perhaps nudging $29.50 should the tariff situation worsen. We can expect another turbulent week ahead, and also close attention to be paid to the CPI figures and any announcements from the Fed, perhaps suggesting that rates may not come down in June after all. Now, we're not quite of the view that the rout is over, though President Trump could theoretically drop his tariffs on Monday. We do not think he will. This may be a game plan that lasts for a few more weeks, and we could see a further 10% decline in equities before it is over, and potentially a consequential fall in silver. With this in mind, we're extending our spread a little and expect to see gold trade this coming week between $2,950 and $3,100, with $2,925 and $3,125 as outliers. Silver, we're going to expect it to trade anywhere, and we're being perhaps the margins a little bit too small, $27.50 and $30.50, with $27 to $31 as outliers. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you'd give this video a thumbs up, subscribe, press the bell sign. Watch out for videos during the week. We're going to produce one or two just to keep you apprised, particularly if markets are very volatile. Have a great week ahead, whatever happens, and hopefully a prosperous one.